A silent power shift is happening inside America's financial system right now, and history shows that whenever Federal Reserve leadership changes, markets rarely stay stable. Bitcoin, the stock market, gold, everything reacts, sometimes with panic crashes, sometimes with explosive rallies. And now, that exact phase could be starting again. Jerome Powell has delivered his final speech. Donald Trump is openly pushing for lower interest rates, and the name of a new Fed chairman is already being discussed. This is not just politics. This is a trillion-dollar game, and it could directly affect your investments. Today we'll look at what history tells us, what this could mean for Bitcoin, and why the next few months could be both dangerous and extremely profitable for the markets. Part 1. What does the Fed actually control? The Federal Reserve, also known as America's central bank, in simple words, it controls how easily money flows through the economy. When interest rates stay high, loans become expensive, companies slow down, and the stock market can come under pressure. But when rates are cut, money enters the system aggressively. Businesses get cheaper loans, and investors start moving toward risky assets. That's why during low interest rate periods, stocks usually move higher. Tech companies grow faster, and assets like Bitcoin often see massive rallies. But this is where the problem starts. Cheap money also creates inflation, and America is already dealing with a massive debt crisis. In 2026, U.S. national debt has reached nearly $39 trillion, and experts are warning that if interest rates stay high, government interest payments could become even more dangerous. And right in the middle of this pressure, the leadership of the Federal Reserve is changing. That's exactly why markets are nervous right now. Part 2. Jerome Powell's final warning. In his final public speech, Jerome Powell indirectly gave a serious warning. He said the independence of the Federal Reserve could come under pressure. In simple terms, political influence is growing. Donald Trump has repeatedly supported lower interest rates because lower rates can boost markets in the short term. If rates are cut, the stock market could rally, crypto liquidity could increase, and investors may start taking aggressive risks again. But in the long run, inflation could become even more dangerous, and that exact fear is now building inside the markets. On one side, investors are expecting a rally. On the other side, smart money is preparing for volatility, and history points in the same direction. Part 3. The shocking pattern from history. If you look at past data, a dangerous pattern keeps repeating again and again. Whenever the Federal Reserve went through a leadership transition, both Bitcoin and the stock market experienced extreme volatility. In 2014, within weeks of a Fed chairman change, Bitcoin crashed nearly 27%. In 2018, after another leadership transition, Bitcoin dropped around 47% within a single month. During that same period, the stock market also became heavily unstable. And it wasn't only crypto. The S&P 500 has also faced sharp corrections during several historical Fed transitions. Even the 1987 Black Monday crash happened around a Fed transition phase. Now, this does not mean history will repeat exactly the same way, but market psychology often repeats itself. Smart money usually builds positions before retail investors react. Sometimes the market shows artificial strength. Everyone believes the rally will continue, and then suddenly a major sell-off hits. That's why experienced traders are becoming extremely cautious right now. Part 4. What could happen to Bitcoin next? Now comes the most important question. What could Bitcoin do next? If the new Fed leadership supports aggressive rate cuts, the crypto market could see fresh liquidity in the short term. Historically, Bitcoin has performed strongly in low-interest rate environments. Cheap money usually pushes speculative assets higher. But the problem is, the market is already filled with uncertainty. Inflation is still high, oil prices remain unstable, and global tensions still exist. So the result could be extreme roller coaster volatility, meaning a sudden crash is possible, but an aggressive recovery is also possible. Many analysts believe institutions are already quietly building positions, and when retail investors start buying from excitement, smart money sometimes plays the opposite side. That's why the next few months could become emotionally difficult for crypto traders. Markets are entering a dangerous transition phase. Fed changes, inflation, U.S. debt, and crypto hype could trigger huge rallies or brutal crashes. Emotional investors panic. Smart investors prepare.
If you found value in this video and want to build real wealth, make sure you subscribe.